So do you want to be an investor that just puts your money in and just touches it and just does not touch it and see what happens? Or do you want to be an investor also that gets some access to companies they can invest in? And then we as a firm, along with our investor community, can then go and make an impact.
This is Venture Out Loud, where we have candid conversations and running a venture capital firm and investing in founders, planning for profits around a purpose, and of course, building businesses through entrepreneurship. I'm Navin Goyal, your CEO and co-founder of LOUD Capital. And today we have Ryan Retcher, COO of LOUD Capital, and a special guest flying in from Chicago this morning, Nishad Parmar, Chief Investment Officer and Senior Partner of LOUD Capital. Welcome.
Thanks a lot for having me, guys. Love to be back here in CBUS.
So what brings you to Columbus today?
Well, it's our partners meeting, first of all. It's always good to be back and see everybody. And then check out the new office at LOUD for the first time we moved to a new place. So checking out the energy and meeting everybody and spending a couple of days.
Yes, for those of you who cannot see, we're in a new studio and this should be our home for a while. It's actually pretty professional and legit, and we hope not to make it less professional. So we're going to continue on our conversation and talk about investments and talk about Nishad and his background coming from a very different background of professional what? What were you doing before you entered the venture capital space?
Yeah, so I'll start off. I grew up in 3 different countries. So I got a little bit of a culture experience, started off in Canada when I was a little kid. And then when I was 9, I moved to India. So it was a different kind of experience, a different culture experience, moving away from kind of North America and moving to India in the middle of, your middle school ages. And I had a chance to experience culture, art, language, a different style of living, how people behave and negotiate and what they do there. And then eventually I came back to the US and finished up high school in Michigan. So it's kind of nice to kind of go through this 3 country from Canada, India to the US and have a good kind of upbringing and understand kind of how the behavior of people, how people invest, how people even think. At that time, I was still pretty young, but now I go back and I reflect on that and I look back at what I went through as a young adult and what I learned and kind of how I apply that today in the investment side.
So be honest with me. All right. If I'm a Canadian and go up to you and I say, hey man, where are you from? Do you say I'm a Canadian? And then you say a different answer to the Indian from India?
I say I'm Indo-Canadian.
Oh,
a little bit of about.
Okay.
No, it's been a good upbringing. I got to say, how I came through just learning. It was kind of hard at first when you leave, let's call it US or Canada. You go to another country, it's different. I went to US boarding school there for a couple of years. And then I still keep in touch with a lot of my friends that I have a pretty strong network now globally that I can still leverage and lean on. And people have gone about and done their own different things. And you can rely on them for any kind of advice, mentorship, coaching, just, a sounding board. So it's been kind of nice to kind of go back and see that, how I broadened my network that I can use today in my professional career.
So that's great. So I'm a kid and my parents just told me that we're moving to another country. I'm 10 years old and I'm scared.
Yeah.
But tell me something positive right now that I'm going to have this different experience than the person who would just stay in the same country.
So being Indian, right? We're born here. Our parents came here. They migrated back in probably the 60s and 70s, just like your parents probably did as well. I didn't really speak the languages back then when I grew up in Canada. I don't have much understanding of our culture. So from a positive perspective, going back, and maybe at first it was challenging because you're young, you're losing all your friends, you're moving thousands of miles away. But then going back and now I look at it, I learned so much. I know a lot about my Indian culture, my heritage, spending time with my grandparents, learning 3 languages when I was there. I can read, write, and speak. I can act like and behave like an Indian when I'm there. I blend in. I don't look like an outsider when I'm there, which is a huge kind of, I would say, benefit now when I'm here and I'm connecting with investors and people within my network. I can connect with them much more easier and I have that cultural kind of experience. And music was a big thing for me too, right? I grew up, music's been in my family for almost 5 generations. So learning about music and I'm playing the percussions, the tabla, learning all that when I was there. Now I can come back and it's another professional hobby for me. So outside of being in venture capital investing, music's my professional hobby. Yeah. I would quit everything and be a musician all day if I could. Someday I will.
Yeah. And didn't you once tell me that one of the most important things to teach your own kids is music?
Yes.
And why?
So from my perspective, if you look at how the mind thinks, you have the right brain, the left brain, people call the left brain the creative brain. Music, arts, whatever you like, music could be anything around arts or painting, anything in that arts section creates that, call it mindset around creativity and innovation, and just kind of keeps the brain going. So kids at a much younger age, when they start doing these things, whether it be learning the piano or violin or doing some kind of painting, it gets their mind going and they can apply that back in their regular world, whether it be math, science, going into medicine or whatever degree they want to pursue. They have that creative mindset, and they might even take that path. They might say, this is the path I do like, and I'm going to go down that path and only do music or arts.
I kind of feel like the mainstream information that's out there is starting to really embrace creativity, psychology, artists more so than before. Before it was kind of like, oh, okay, you're gonna go on that route. Now I think everyone's realizing, to exactly your point, the comprehensive aspect of it, to be a hard worker in all your this side brain, but to bring creativity, a different energy and aspect is really an edge and probably kind of a next level, maybe even a standard nowadays to what building a business in the entrepreneurial world is.
Yeah. I look at creativity and what we're doing at Loud, right? So think about an investment strategy, right? We're being creative on how we look at venture capitalism or venture kind of investing, alternative investing. Our creative light bulbs are starting to go off on how we look at different strategy of investing in this space and how we can make an impact and tying them together. It's all just having that different kind of feeling from an investment standpoint, but I feel it comes from my left brain when I'm thinking about my music and how we kind of are impromptu and how we think quick. And Indian music's all about being on the spot, changing something and being able to perform live. I feel we're doing that at Loud as well. We're changing on the fly. We're kind of reinventing things on the fly, making changes and tweaking them along the way and refining our path as we go.
So I'm a listener. I don't know that much about venture capital, and I'm hearing reinventing and infusing a new energy and doing it differently. Try to give me a commercial about what you look at venture capital as and what you see as the opportunity to change.
Yeah, so traditional venture capital has been around for a long time, right? Private equity investing, has been around for many, many years. I see that it's also changing in terms of who has the ability to shape certain things from a power and influence perspective. It used to be these exclusive people investing in these companies that no one has access to from an investment standpoint, and also no one has access to these companies that they want to invest in. That's completely changed, right? With what's going on just in the economy, the access to information, much more easier online. So how we can bring, I would say, people that typically would not have access, common people that would not have access to some types of investments, that you put that on the table for them to see that these are things that they can definitely come and get involved in and make an impact in the community.
Yeah. And I want to rephrase that. You said common people. Let's say I'm a hardworking person with money, but I don't have the network or people that have their hand in the door to these amazing potential opportunities. And that's what you mean, right? Like people who are interested, but never really had enough information or definitely not access to get in on that.
Yeah.
Right.
So investing is kind of like luck. I'm not saying luck like an asteroid or something hitting you on the top of your head. I look at it, investing being like, you have to put yourself in positions to be awkward outside of your bubble, to go and intentionally meet people that are not within your common circle, right? Go to these networking events and put yourself outside of that. So you have the opportunity and the luck to meet those people. If you take yourself outside of that comfort zone, then you'll find the right opportunity to come and invest.
And in fact, you literally just described what I think of luck as. When people say you're lucky or you got lucky or you had luck being here, absolutely not. I actually don't believe in that. I think that people work really hard to put themselves in a position of opportunity that's sometimes labeled luck.
Yep.
That's how I see it. Ryan, do you have a different perspective?
No, I think you're dead on. I literally, before I walked in this room, I was just talking to someone about crypto and crypto success. And there's a lot of people that are right now being, kind of lumped in this area of being lucky. You have these instant crypto millionaires that you put a couple $100 or a couple $1,000 in something, and all of a sudden, something hits and they're a millionaire. And you don't typically see that, especially in a short period of time in the public markets or the, certainly venture capital, where it's a much longer time horizon. But, I think people oftentimes discount that, yeah, it might be luck involved in that context, but you have to be willing to go out of your comfort zone to invest in something that you don't necessarily fully understand. Not a whole lot of people fully understand crypto that are in the space, yet they are educating themselves enough to make that educated bet to make that luck.
Yeah. So you just said a very, very hot topic right now, crypto. So now we have 5 and 10-year-olds and 15-year-olds and 50-year-olds listening right now that are like, what are they going to say next about crypto?
I opened up the rabbit hole.
Hey, so I don't say luck exists. Luck is probability, plausibility, or actuality. So 3 things you kind of think of. Luck does not exist. So it falls under within those 3. That's the way I look at it.
Ooh, I like that.
But we can get into crypto. It's a whole other ball game. Actually, we just launched our new crypto fund.
Yes, we did.
LOUD, right?
Yes, we did. Why? Okay, yeah. Why? We're into venture capital. We're into alternative investments. A lot of different things that have been out there for a long time that we're trying to open the doors on, educate, curate, and bring impactful investments to, right? So crypto, brand new. A lot of people are investing. A lot of people are talking about it. A lot of young folks are really getting into it. So how are we as a firm looking at crypto outside of just being an opportunity, of course? How should we think about it?
Yeah, so we have our foundational pillars. So we started off, the venture capital firm as a venture fund, right? That's our traditional high risk, high reward pillar. Then we opened it up to this dividend growth model, the commingled, call it private mutual fund. We have our private growth, which is our more standard, low risk type investing. And then we said, okay, let's add a 4th pillar. Crypto's gotten so much popularity. It is publicly traded, but there's also some private opportunities. And people don't know, but there's a lot of stuff out there, how you can protect yourself, because there's a lot of vulnerability around crypto because it is an open, transparent way of transacting.
It's a Wild West.
So we've partnered up with some great people who are in this space, been in the space for quite some time, and joined together to offer this because we feel it's the right for our investors to get access to this, right? So we did our due diligence, got the right partner on board to make sure that we can offer these different pillars that investors can come in and get access to these things, because it's something that they should definitely see and take some of their assets or take a portion of their assets and put them into these different buckets that we offer. And crypto should be one of them.
And I just want to add one thing. To me, that's a lesson in life, but in entrepreneurship, is knowing that there is an opportunity out there, trying to grab that opportunity, and knowing that you are one piece, knowing that there's a whole pie here. I can fill one piece, and I need other people to fill that to get this done. Yep. And I think that's a big lesson that probably all of us have learned on our own journey. And what you just said, us as a venture capital firm know that our investors deserve to get into crypto. We're not the experts in it. However, partnering with people who've been doing it, are passionate about it, have been thinking and talking and investing for a while, that is a big component, in my opinion, of how you can become successful in many ventures.
Yeah, absolutely. And I think paralleling that back to where we started with Nishad and really your journey and getting into the space, both, personally and with LOUD, one of the things that as I've gotten to know you really well and in context, it sounds like it might have been part of that very diverse upbringing that you had, multi-country, multicultural upbringing. But your ability to stretch, I think, just knowing you and on our team, you are our quantitative brain.
Yeah.
You
ask a lot of questions.
Nishad asks.
Be curious. Oh, you got it.
Questions. If you don't like being asked a lot of questions, then maybe talk to me or Navin. But no, this is a good thing, and this is really important. Nishad asked a lot of the questions that from a quantitative standpoint, you have to ask to get valuable information to make decision points. But one of your gifts is stretching, and you can stretch to the qualitative side, to the creative side, to see what makes a deal a deal. Because if you look at the numbers and the quantitative, a lot of times the gap between saying yes to a really viable opportunity that really makes the difference for our investors is that leap in being able to stretch outside of the quantitative. This is why banks don't do venture. This is why
Yeah.
banks oftentimes
They're
don't
black and white.
invest. It's black and white. And if it doesn't fit in this very quantitative, very small box, then it's not for us. It's okay. But to be in this space and be an investor in alternative investments, no matter what it is, you have to have that ability. And really our team, I think that's almost our secret sauce, or it is our secret sauce, in that we have a lot of people where, whether we have someone like Nishad, that's our quantitative leader, but he can stretch into the qualitative. We have Navin, who's the CEO, who is very qualitative, but can stretch and understand the quantitative when it's needed. And I personally, I'm very much in the middle. I've always been able to blend both ways, skill set wise, in the way I think. But everyone on our team, if you go down the list, our common commonality, I think, is that no matter where we sit on our natural gifts or how we think, at our center, everyone can stretch. And if you're going to be an investor in general, I think that's what you need to kind of tap into.
And that's the pie I'm talking about, right?
Yeah.
There's a lot of institutions, firms that have one piece of the pie that are very quantitative because they have backgrounds involved in banking or experience in banking or financial industry. But when it comes to experience or knowledge and entrepreneurship, right? Have you built your own business or found your own business? Have you been part of a growth company and you had to be really creative with limited funds, limited time, limited resources? That's using the other parts of the brain, but I really feel that is a big component missing in our industry.
Yes, absolutely. I think it goes back to how investing has been going on and how they look at this. If you look at larger institutions, institutional funds, large family offices, they just have this process that they follow. And I don't think anyone's broken that process yet at that level in terms of large scale investing. And it's slowly happening now when larger communities are coming together of investments. And then they're starting to look at these bigger pools of money that they can actually move the needle. And I think that we saw that in some of the public markets, right? Some of those things happen where they're fighting some of those meme stocks that came on, GameStop and Nokia. All these people are coming in against these large institutional investors, right? They all teamed up together and they started moving the market. I think that's happening in venture in these private investing, private equity type levels where we're seeing these different components starting to change. And we'll see what happens. I think it's definitely going to be disrupted.
I totally agree. I mean, there's a lot of money in venture capital. We know the power of venture capital, right? What it does to a group of founders, the community to which those founders belong to, how uplifting that is. You want to give your thought on that? Why you think venture capital is so powerful? Because I think we all know that with power comes responsibility. But again, I don't know much about it. I'm listening to this podcast for the first time. I know venture capital. I see it in the Wall Street Journal once in a while or on the news feed somewhere. Why do you think venture capital is so powerful? And I think about
you're asking me, or are you asking Nishad?
Both of us.
So
this is the Nishad show.
No problem. I think it's important for us to give our honest thoughts.
Yeah.
And so if you want me to start, I can. I think about this every day.
Yeah.
So it's almost unfair.
Yeah,
but
so your question is, why is venture capital so powerful?
Why is it so powerful? Another way to say it is, why should it be taken with such a seriousness of responsibility?
So let's start off with the public and the private space of investing. Then we'll see as an investor, if I'm looking from an investor's shoes, the impact you could make, right? So if you're investing in the public markets, you're putting your money into, you might be a small individual investor, you might be a medium-sized investor, maybe not a large institution, but you're investing in these companies that you might not have direct impact to, like a Facebook or an Amazon, and many other companies, large energy companies. You're putting your money in, you're investing in as an investor, and you're just waiting to see what's going to happen based on speculation, based on maybe some technical data you get on what's going on in the market, but you don't have a way to impact that. When you come into the private side, depends on what companies you're investing in, especially as LOUD, we're investing in these smaller early stage companies, our venture funds, right? We have direct contact with the CEO. Half of the companies we sit on the board, or one of us are either on a board, advisory board, or something. Our investors also get involved, right? Sometimes in the due diligence, They're connected to the companies. We showcase the companies. There's a much more direct connection to them. There's also direct control of what we can do to make an impact with that company. So I think as a private investor, as venture capital, and as an investor coming into a venture capital firm to be an investor, you have that ability to make a change and have direct control and impact that you would not have when investing in Facebook or Amazon or these larger multi-billion or even trillion, now they're hitting $1 trillion market caps. You're just waiting for the stock market to go up. So do you want to be an investor that just puts your money in and just touches it and just does not touch it and see what happens? Or do you want to be an investor also that gets some access to companies they can invest in? And then we as a firm, along with our investor community, can then go and make an impact, right? That's why it's so important from a power perspective that you can actually change and directly impact people and companies right away and see them grow over 4 or 5, 7 or 10 years versus investing in something in the public markets that you're not going to be able to touch or see versus getting a package delivered to you because you bought it on Amazon, but you might own the stock.
Yeah.
That's the way I see it from an impact perspective and how an investor, if I was an investor and I invested in a firm or a company or a fund, how I have direct connection to some of these companies that I know are growing and I can see them and I can meet them.
Yeah. And I just realized when I asked that question, I've been thinking about this the last few years. So my thought process is crystal clear. And I'm coming out with a book here soon, and I was writing for 2 years. And every morning after I worked out, wrote some stuff for 15, 20 minutes, and there was all these light bulb moments. And what I realized in conversations and experiences that I've had with entrepreneurs, like many of us had here in this room, people on the other end were emotional and crying and with joy and sometimes with sadness. Companies shutting down, laying off people, breaking up with founders, getting kicked out of a marriage, getting kicked out of your apartment. I mean, entrepreneurship, there's a lot of sexiness to it, but 95% is just brute life. Yep. And so when venture capital comes in, right, there's an ability to uplift that team or company. And when I say uplift, is given the opportunity to shine on a higher stage. So you get an investment from one VC firm. What happens to the other VC firms in the network? Oh, who'd you invest in? And it's like this stamp of approval. And so if you were the first one to invest in them, to me, it's really important to ensure that the diligence is done to make sure that this bucket of money going to this team of founders is not only right in your mind and that they're going to succeed, but also just making sure that there's other people and great companies if you've made sure that you've done diligence on the rest of the industry, right? Because there's 3 of us guys in here, right? And so we might have a lot of friends that are guys and people who are, calling you, Nishad, and saying, hey, look at my company. And so I know we internally have looked at that and said, well, you know what? There's a lot of great women founders out there that we might not be getting texts from at the moment. Let's just make sure before we go into this fintech company that we're enabling the different pathways and different opportunities. So when we do make that investment, which is the best investment for us and our fiduciary duty to our investors, we know with confidence that we've done our homework.
Yep.
So that's why I say it's so powerful, and with power comes responsibility.
Yeah, and I think to go back to your question, I hesitated at first to answer because I do think about this a lot, and my answer in these cases is typically very long because it's such a complex thing.
Yeah.
Right.
Yeah.
To me, I think about what the opportunity for venture to be versus what it has been, and that's more along the lines of I think what we tend to think about a lot, and in the context of finding those underrepresented entrepreneurs. And I think the key to making venture impactful moving forward is really starting with the qualitative, because most of the venture capital firms out there, they are, maybe at the top levels, founded by successful entrepreneurs that have been there, done that. But a lot of the people that they've hired underneath are former investment bankers. That's kind of a career path. You go off, you become an investment banker, you get some assignments and, help some companies go public. You see that side of it. so venture capital firms want to hire these people because they know what it takes to take a company public. But in the early stages, that view, that lens, and it can oftentimes be applied too early, or they try to apply it too early, and you see forced goals, you see forced revenue goals, things like that are unrealistic and put way too much pressure way too soon on a company to be able to become what its potential is, because sometimes potential takes a little bit of time to understand the needs of the market that you're trying to affect. And if you try to force it through quantitative model of revenue, and if you don't hit this number, by this point in time, well, then you're dead to me. That's obviously extreme, but one of the things that I think venture has to do is take that qualitative approach. The qualitative aspect is focusing on the founder first.
Correct.
You have to focus on that founder first and feel really good that that founder is the person to lead the charge. And then later, as they start proving out what they said they were going to do, and they get happy customers, and whatever it is that they're building is working, then you start to apply in layers that quantitative approach. And not saying that you can't have a quantitative analysis at the beginning. That's what I said earlier. That's what you bring to the table for us in a very professional way. But I think we have to be more creative as venture capitalists in finding that entrepreneur, trusting it. Scott Kapoor actually talks about this in his book, Secrets of Sand Hill Road. And, it's interesting. He dedicates a chapter about founders, but the rest of the book is on the technicals of it. And he's speaking to both entrepreneurs and would-be investors in this. But it's interesting that really a small portion of the book is focused on that. Okay, you are betting on that founder. But I think venture has to be much more that, especially early on.
Oh, early on, for sure. The early stages, absolutely. The team, the founder, have they been there, done that? Their track record, understanding the market, having a perfect person to lead is what's really important in the companies that we invest as Loud.
So the future book of venture capital is 2/3 qualitative and 1/3 quantitative?
I think to a certain point, once you hit that probably Series B, Series C level, then that changes. But unfortunately, what I'm seeing trend-wise is that quantitative model is being forced into the seed and Series A realm, and we're going in the wrong direction as an industry. Obviously, we're trying to prove that you can do it, you can make an impact, you can invest in underrepresented entrepreneurs. But you can also bring that quantitative, so you're not going blind and just trusting a founder.
Yeah, well, actions don't lie, right? So let's keep going and doing what we do. But yeah, overall, this is great. We're having candid conversations about venture capital, everything around it, from investors, entrepreneurs, and stakeholders. I want to thank my man, Nishad, coming in from Chicago today and having an incredible discussion. I definitely look forward to having more with you. And of course, Ryan, my main man next to me, just doing this podcast and honestly just having really good conversations. So until next time, thank you.
Sounds good. Good to be back. Thanks.
Thank you.